Here's a number most people in hydrogen quietly avoid. Roughly 90% of announced hydrogen projects will never reach final investment decision. Not because hydrogen doesn't work, not because electrolyzers are broken, not because renewables are unavailable. They fail because the surrounding system collapses before capital ever commits. That means trillions of dollars in announced capacity that will never be built, years of engineering that never turn into steel, and entire careers tied to projects that disappear without explanation. The most uncomfortable part is this. In most cases, the failure was visible long before the project died. Welcome back to Renewables 2050. This channel is not about hype cycles, press releases, or optimistic renderings. It's about the execution layer of the energy transition, where projects either survive contact with reality or quietly stall. Over the last few years, we've reviewed a wide range of hydrogen projects, including those that reached FID and those that stalled despite strong intentions. Across regions, technologies, and markets, the pattern is consistent. The limiting factor is not technology. The limiting factor is execution under real-world system stress. That realization is why we built H2 Hub by ReneEnergy. Not to teach hydrogen as a concept, but to help projects survive the hostile space between concept and FID. Because when hydrogen projects are announced, attention goes to the wrong variables: electrolyzer capacity, power source, target cost per kilogram. Those numbers look good in announcements, but they are rarely what kills a project. Projects fail because the surrounding system breaks under pressure. They fail at bankability. Can lenders rely on the revenue profile, or does it collapse under sensitivity analysis? They fail at offtake. Is demand contractual and durable, or conditional and revocable? They fail at certification. If compliance assumptions change, does the project lose market access overnight? They fail at grid integration. Interconnection delays, curtailment, and congestion quietly destroy utilization assumptions. And they fail at utilization itself. Running at 4,000 hours instead of 8,000 is not a rounding error. It is often the difference between survival and write-off. These are not edge cases. They are structural failure modes, and most teams discover them far too late, after timelines have slipped and capital has been spent. H2 Hub exists to surface those failures early when the cost of changing direction is still manageable. H2 Hub is not a course library. It is not a news platform. It is not a collection of calculators. H2 Hub is an execution system built around one non-negotiable question. Does this hydrogen project survive under realistic stress conditions? Everything inside the platform is designed to answer that question honestly, even when the answer is uncomfortable. The platform integrates three layers that are rarely combined. The first is execution-oriented education, structured around how projects actually move through development, rather than how hydrogen is usually explained. The second is professional tooling designed to expose fragility instead of masking it. The third is a curated expert network of people who have worked on real hydrogen projects through execution phases. Together, these layers reduce uncertainty before it becomes expensive. The educational foundation of H2 Hub is organized into 10 modules, but not in the way most courses are structured. They are not arranged by technology or color codes. They are arranged by execution reality. The first module reframes hydrogen fundamentals from a developer's perspective. Not marketing categories, but production pathways, storage constraints, transport trade-offs, and where hydrogen actually makes sense once physics and economics are respected. The second module moves immediately into project economics, because this is where optimism usually breaks. Levelized cost of hydrogen is examined under utilization risk, power price volatility, and capital uncertainty. Financial metrics like IRR, NPV, and debt service coverage are taught not as theory, but as the language financiers use to approve or reject projects. The regulatory environment is treated as a moving system, not a checklist. Incentives, certification rules, and compliance frameworks evolve, and projects that assume stability are often the first to fail. H2 Hub focuses on how regulatory uncertainty translates directly into financial risk, and how to design projects that remain viable when rules tighten. Offtake strategy is addressed as a structural pillar, not a sales exercise. Hydrogen projects do not fail because demand is missing. They fail because revenue certainty is weak. The platform breaks down how offtake agreements actually function, how price mechanisms behave under stress, and how counterparty risk is assessed by lenders. Technology selection is examined without vendor bias. PEM, alkaline, and SOEC systems are evaluated through degradation, integration complexity, and balance of plant realities. The focus is not on efficiency claims, but on survivability once systems operate at scale. Grid integration receives dedicated attention because it is one of the most underestimated failure points. Interconnection queues, curtailment risk, behind-the-meter strategies, and electrical architecture decisions are examined in detail. Many hydrogen projects fail not because power is unavailable, but because access to reliable power under realistic conditions was misunderstood. Financing structures are then addressed head-on. Equity, debt, tax equity, and blended finance are explained through the lens of how hydrogen risk is perceived differently from conventional renewables. The platform focuses on how to structure projects so capital providers can tolerate uncertainty rather than be surprised by it. Certification and compliance are treated as market access constraints, not paperwork. Guarantee of origin systems, emissions accounting, and audit risk determine whether hydrogen can be sold into premium markets. Projects that fail here often do so silently after years of development. Risk management ties everything together. Risk is treated as something to be engineered, not avoided. The platform shows how successful projects identify, quantify, and actively manage technical, commercial, regulatory, and counterparty risks throughout development. The final execution playbook aligns engineering, commercial, regulatory, and financial workstreams into a stage-gated path toward FID. This is the difference between activity and progress. Education alone, however, is not enough. Learning without stress testing is dangerous. That is why H2 Hub integrates professional execution tools directly into the platform. The schematic generator allows teams to move from vague concepts to coherent system logic quickly. By inputting project scale, application, and power source, users generate professional schematics that reflect real integration constraints. Inconsistencies surface early when changes are still cheap. At the center of the platform is the Hydrogen Reality Engine. This tool stress tests project assumptions against real-world conditions. Power price volatility, utilization shortfalls, offtake delays, regulatory tightening, equipment underperformance. The output is not reassurance, it is clarity. It shows where margins disappear and which assumptions matter most. Financial modeling tools are integrated using project finance logic familiar to lenders and investors. Long-term cash flows, sensitivity analyses, and financing scenarios are aligned so technical, commercial, and financial narratives tell the same story. For low-carbon and green hydrogen pathways, emissions modeling tools help teams evaluate certification risk early, rather than discovering disqualification late. Even with the best tools, expertise still matters. Hydrogen projects are complex systems. That is why H2 Hub includes a curated consultant marketplace. This is not a directory of generalists. It is a vetted network of professionals who have worked on hydrogen projects through execution phases. Developers reduce the risk of engaging the wrong expertise, and consultants engage with projects that are structurally serious. H2 Hub is built for people who intend to execute. Project developers pushing toward FID, consultants delivering execution-grade work. Investors stress testing hydrogen risk before capital is committed. Industrial companies evaluating whether hydrogen adoption survives real operating conditions. Professionals who want to build hydrogen expertise rooted in reality. If your goal is to understand hydrogen at a surface level, H2 Hub is unnecessary. If your goal is to survive execution, it is not optional. Access to the platform costs $15.99 per month, or $175 per year. That is less than the cost of one incorrect assumption, one missed regulatory requirement, one delayed interconnection, one utilization miscalculation. Any one of those can erase millions. The platform exists to catch them early. If you are serious about hydrogen as a builder, advisor, or investor, guessing is the most expensive strategy. Guessing about utilization, guessing about offtake, Guessing about compliance. Guessing about financing. Hydrogen does not reward optimism. It rewards systems thinking under pressure. Go to H2 Hub by ReneEnergy. Start with a free course. Stress test your assumptions. Learn how projects that survive actually operate. The link is in the description. The hydrogen economy will not be built by announcements. It will be built by teams that understand execution under stress. I'm betting on the builders. If this was valuable, subscribe to the channel. We are building a serious execution-focused hydrogen community here. Leave a comment with the biggest execution challenge you are facing right now. Those questions shape what we cover next. Thanks for watching. I'll see you in the next one.